Good morning to all. I am Dr. Kumar, Department of Commerce with Computer Applications, Dr. Drsnsrcas College of Arts and Science. Today we can see methods of profit and single entry system in hire purchase system. So first of all, methods of computation of profit. The profit made by the vendor on hire purchase transactions in case of goods of small value can be calculated by any one of the following methods. Say for example, debtors method, stock and debtors method. Methods of computation of profit. So first one, debtors method. Under this method, the profit or loss made on goods sold on hire purchase can be found out by preparing hire purchase trading account. The specimen ruling of the hire purchase trading account. Second one, stock and debtors method. The profit made on hire purchases transactions can also be calculated according to stock and debtors system. Under this method, the following ledger accounts are to be opened. First one is hire purchase stock account, second one stock and shop account, third one is hire purchase debtors account, fourth one is good or hire purchase account, and last one is hire purchase adjustment account. The following journal entries are to be passed if this method is followed. When goods are purchased for shop stock, the journal entry is stock at shop account debtor to purchase account. When goods are sold on hire purchase, the entry is hire purchase stock account debtor to goods sold on HP account. For total installment which becomes due, the entry is hire purchase debtor account to hire purchase stock account. Next, the following journal entries are to be passed if this method is followed. When cash is received from debtors, cash account debtor to hire purchase debtors account. Next, for transfer of goods sold on HP, goods sold on HP account debtor to HP adjustment account to trading account. Next, when goods are repossessed on default and loss is transferred to HP adjustment account. Good repossessed account debtor, HP adjustment account debtor, to hire purchase debtor, to hire purchase stock account, to hire purchase adjustment account. Next, single entry system or accounts from incomplete record. Meaning, there is no system of accounting is called single entry system. The term single entry is vaguely used to refer to any method of maintaining accounts which does not conform to strict principles of double entry. Single entry does not mean that there is only entry for each transaction. In fact, single entry is a combination of a double entry for some transactions like cash collected from debtors, single entry for transactions like cash sales, and no entry for transactions like depreciation. Single entry system definition. According to R.N. Carter, single entry cannot be termed as a system as it is not based on any scientific system like double entry system. For this purpose, single entry is nowadays known as preparation of accounts from incomplete records. Next, salient features of characteristics single entry system. First one, absence of uniformity. It is not a specific system governed by definite files of operation. It is highly flexible according to the capability of individuals maintaining their records. Second one is records maintained. Usually person account are fully written and a cash book is maintained, but normal accounts and most of the real accounts be completed omitted. Mixing of transactions. Business dealings as well as personal transactions are mixed while writing the cash book. Suitability. Sole traders, partnership firms and professionals who cannot afford a paid bookkeeper usually follow this method to write their own accounts. Joint stock companies have to follow double entry system under the provisions of the Companies Act. Disadvantages or limitations of single entry system. The following are the defects and limitations of single entry methods. First one is insufficient records. Except personal accounts and a cash account, all other impersonal accounts are left out. So the accounts serve very little purpose. Second one is absence of trial balance. Trial balance cannot be prepared for any period, hence arithmetically accuracy of the account cannot be verified. Third one is difficulty in ascertaining profit. Absence of record for expenses and incomes makes it impossible to ascertain profit in a reliable way. Next one, difficulty in ascertaining financial position. In the absence of real accounts, balance sheet cannot be prepared to assess the financial position of the business. Last one is lack of statistical data. Statistical data relating to increasing or decrease in sales, purchase, different items of expenses, profits, etc. cannot obtained. Thank you.